India's foreign inward remittance jumped to $80.127 billion in 2020 to 2021.
Coronavirus pandemic continues to grow. Many African countries are witnessing a slowdown of remittances.
Last year, Colombia received $9.4 billion US worth of remittances. These money transfers from families living abroad mostly came from Spain and the United States.
During the global pandemic COVID-19, the world has seen a devastating crisis. A major factor playing a role from both the microeconomic context and the macroeconomic context was the stoppage of business, trade, and other economic activities around countries. Economists thought that some countries would not be able to absorb the economic impacts of COVID-19 on their economy and collapse. Some economy collapsed too. A prime example of this is Sri Lanka going bankrupt on the 12th of April in 2022 by defaulting with $51 billion on external debts. But some other South Asian countries like Bangladesh, Nepal, or Pakistan are still surviving in this challenging period due to some factors. One major factor that is reviving these economies from the aftereffects of COVID-19, and, also, bringing home money is remittance. In this case study, we will explore the economics of remittance, and how it is keeping the economies of many regions alive will be the key issue of the study. The money sent by a foreign worker to his home country is called remittance. The concept of remittance is more common in the third world countries compared to the Western world. A large number of people from underdeveloped countries go to developed regions to seek jobs and feed their family back at home. And the money sent by these people to their home country is remittance. Remittance is the single most important entity in the economies of many countries around the world. During the year 2020, when COVID-19 stroked the world, Bangladesh recorded an increase of 10.87% in remittance income compared to the previous year. While in 2019, the country made $16,419.63 million, in 2020 they made $18,205.04 million from remittance income. Remittance is one of the major contributors to the economy of other countries in South Asia, Africa, and different parts in the world. Every year on the June 16th, the world witnesses the International Day of Family Remittances, shortly known as IDFR. This day is observed to raise awareness about the hard work and sacrifices made by migrant workers who leave their family to support them back at home. During the challenging times of the pandemic, undeveloped and underdeveloped regions around the planet struggled to keep balance in the economy. In most countries, without the industries producing necessary goods, all types of industries were shut down. For this reason, many countries that largely depend on the import of products had to face large reductions in national income. During this crisis period, it was the remittance sent by the foreign workers that helped the economy of the middle-income nations survive. According to the reports, 1 out of 7 people around the world are involved in remittances. Around 0.2 billion of these people work in foreign countries for remittances, and 0.8 billion people receives this money to live well. More than 200 million people from different countries work as employees in other countries to make sure that their family survives well at home. Though the pandemic shattered economic activities around the world, the remittance growth globally has still continued to grow every year. The example of Bangladesh making more than 10% growth in remittances is a proof to fact. According to the reports of the World Bank, the lower-income countries received an amount of US $605 billion only in the year 2021. While 2021 and 2022 are regarded as the hardest phase for the economy after the COVID-19, the lower-income countries made this large sum. And the overall remittances in these countries also increased by 8% in 2021 compared to 2020. While most economists predicted fall of economies in the year after the pandemic, remittance flow didn't stop. On an average, a migrant worker sends around US $200 to $300 in every 1 month. This money might not be taken as a large sum in the developed countries of the West. But in the eastern part of the world and in the African regions, this sum is enough to ensure a sufficient lifestyle. Almost 60% to 80% of the household's overall income is represented by remittance money. The money that migrant workers send from the developed countries is only 15 to 17% of what they actually earn. As they shift in developed countries, they have to spend the other 80 to 83% for their living. So, more than 80% of their income actually stays in the host country. With globalization around the planet and increased use of natural resources, Middle Eastern countries have grown vastly over the last 3 to 4 decades. This has opened a large number of opportunities for poor Asian countries to send their workers to join the workforce of the likes of Dubai, Saudi, or Qatar. With time, distribution of money around the planet gets more diversified. The development of the Middle East didn't just help them but also opened opportunities for millions of migrant workers from low-income countries. Over the last 2 decades, the remittance flows within countries have also taken various modifications. In times of adverse situations, remittance is controlled by governments to ensure proper maintenance. During the pandemic, the low-income countries introduced various strategies to bring more remittance to the countries. One of the most effective ways used by the South Asian countries was to provide interests with remittances. The central banks of these countries attracted people by providing 2 to 5% more added money with the basic amount they received as a remittance. This made people take it as an opportunity, and the foreign workers also pushed to send more money home. The remittance around the countries didn't stop for several factors. Most of the workers migrating to other countries do jobs in the production, manufacturing, extraction, or the service industry. These are the industries that didn't stop, or controlled with balance during the pandemic in 2020. So, most of them didn't face the loss of jobs. Also, the adoption rate of digital technologies is higher among migrant workers, which made it possible for them to sustain their jobs during the COVID. Another factor that played a major part in the increased rate of remittance around the world is the fintech industry. Fintech is one of the biggest revolutions the world has seen during the last 10 to 20 years. And, due to the increased level of mobile financing, remittance flow around the world has increased. Smaller sum of money is now mostly sent around the world using mobile transfer, which was around $12.7 billion in the year 2020, and, by the year 2021, it rose to $16 billion. By the year 2023, it is crossing more than $25 billion of US dollars. The rural areas of the developing and underdeveloped countries in South Asia and Africa are the highest benefited parties of the remittance economics. Most of the workers migrating to developed regions for work are from the rural areas of the home countries. More than 50% of the remittance is sent to the households of the rural areas of the home countries. 75% of the remittance flow around the world goes to the poor and food insecure areas where infrastructural development has not increased yet. The rural population of underdeveloped countries uses this remittance to improve their lifestyle, enhancement of livelihood, and achieve the SDG goals set by the United Nations. The accumulated flow of remittance globally will be around $3 trillion within the year 2028. This is a major improvement of the globalization aspect. If we talk more specifically, 75% of the remittance income is used for food consumption, medical fees, and school fees, which is literally a fight against the world hunger crisis. Remittance is making the world a balanced place, and people are getting food on their table due to the flow of remittance. For major types of expenses are covered by remittance in the third world countries. They are 1. Consumption of food. 2. Household expenditures. 3. Payment of educational fees. 4. Medical bills. Immense number of migrant workers leaving their home country is bringing betterment of lives for their family in the home country. Not only these, but during the crisis period, migrant workers are able to provide money for their family emergencies with remittance money. For encouraging people to provide more remittance, governments provide percentage-based incentives to the remittance providers. As 75% of the remittance is used for basic needs, the other 25% is used for building assets that are largely useful for the economy of the home country. This 25% money is around $150 billion per year, which is used for investing in business, real estate, and other activities that bring economic benefits to the people in the home country. There are 70 countries in the world who relies for more than 4% of their GDP only on the income from remittance. Remittance works as the engine of socio-economic growth for the third world countries. With the improvement of financial technologies, flow of remittance is getting easier than ever. The world is becoming a place of more connectivity, and the remittance income for countries is increasing with time. Remittance has not only saved the economies of developing and underdeveloped countries, but also, it will be an impactful factor in the coming years. From 2022 to 2030, the remittance provided by migrant workers around the world will be $5.4 trillion, and of these $5.4 trillion, $1.5 trillion will be reinvested in the economy of the home countries. The countries that will be able to use this large sum properly will be the most benefited of all.